G'day, Internet. Max right here, and we have one of our favorite guests on the channel here, Juan Villeverde. Juan, thank you so much for being here.
Hey, Max. Good to see you, my friend.
Good to see you too, and I'm looking forward. We're going to meet in the flesh for the first time at Miami Bitcoin Conference. So if you're going to go to Miami Bitcoin Conference, give us a shout out in the comments below. We'll look out for you guys. I'm looking forward to meeting you in the flesh first time. We've had so many conversations over Zoom, so it'll be good to see you above the chest, or below the chest.
Yeah, that's going to be exciting. I'm actually looking forward to it.
Good stuff. All right, buddy. So we had a chat about, I think it's about a month ago or so now, and
Yep.
we had good reason for you to do a little bit of a celebration dance. You correctly picked the bottom of the market very, very nicely, and you gave your forecast at the time. You said that you expect this rally to continue probably through until I think you said May. We're coming up to May, and we're about the same price that we were as when we had the chat about a month ago, give or take. So we haven't seen much movement. I thought it was time to check back in with you and see what your forecast is. You're still feeling good. I think you even dropped the price of 50,000. You thought we were going to hit a Bitcoin price of 50,000 in May. We've stood still for a month. I wanted to check in with you and see what your thoughts are currently.
All right. So first of all, let me do some CYA here. Look it up if you don't know what that is. So first of all, I am not as convinced of what happens between now and the end of May as I was of the November bottom. So sometimes if you're a cycle analyst, sometimes the picture is clear because you can see many cycles converging at one point. So that makes forecasting is not easy. It never is. It makes your job a little easier because you only have the one date, which is in my case, it was November 2022.
You had a lot of confluence on that one.
Yeah, I had high confidence that we're going to see something around that date. In fact, when the markets seemed to have bottomed in June, I was actually at a conference speaking to this. So I said this publicly in September, I think, or in October. I said, yeah, the June low in terms of price looks good because the magnitude of the sell-off, if you look at the amount of days going down, it matches previous bear markets. So my forecast, my outlook was for that low, the June 2022 low, to be retested in November. That's kind of what happened. In the case of Ethereum, the November low is slightly higher than June. In the case of Bitcoin, it's slightly lower. That doesn't matter. In both cases, there are cycle lows and there's a dramatic sell-off into that key date. So I was pretty confident of that, and it worked out. This time we're in what I call a mid-cycle. So the cycles are starting to top out. They're starting to top out between right now, today is April 27, and late May. Early June, I think, is June 5. So we're in a topping process. So I think we're in the final stages of a rally. So if you must know, typically cycles converge in lows and then they top out one after the other. So you have these rounded tops. You saw that in we were speaking about this before recording. That's what you saw between March and May of 2021, a topping process where many cycles are starting to peak, and then that leads to a sell-off. So here's my outlook. I think Bitcoin is right now it's kind of probably in a bottoming process. So it is in what I call an 80-day cycle sell-off phase. So that's called also a trading cycle. It lasts about 3 months. There's a cycle in Bitcoin that lasts 3 to 4 months. I think that cycle topped in mid-April, and I think we're in the bottoming process. Now, when does the bottom hit? I don't know. It could be between now. It may have been already. It may have happened already this week on the 24th of April. It could extend into early May, maybe May 5. I think that's my ideal date is May 5. So the top was in April 14. It's bottom in May 5. Then it rallies into late May, somewhere around the 27th of May, and it hits a final top. The top could very well be 50,000. However, pointed out correctly, it's been stalling for weeks. So I'm thinking we're going into the 40s. Because another rally is going to take us to 40K at least. So far, the cycles have been pretty symmetrical, meaning 50% rally, 20%. So now we had another 50% rally between early March and mid-April. Another 50% rally would take it, give or take. I'm just rounding the numbers.
Sorry, you cut out just then. Another 50% rally would take it to what?
So another 50% rally would take it to 45,000 from current levels. And that's, so the outlook it hasn't changed. I think we hit a top in late May, and I think the top is around, let's say, between 40 and 50,000. Because it has stalled so long, which is it's not unusual. It can happen. I'm not so sure it hits 50,000. I think it may have gone slightly shy of that, 45, 46 by late May. I'm not super confident of that. What I am confident on is we have a month left in this rally, because then I think things will get worse in the TradFi system. I think something's going to break harder. If we want to talk fundamentals, I think what's happening now, I'm pretty confident we're U.S. heading into a recession. Financial system is going to break. It's been breaking since October, so I'm not really saying anything new. What I'm seeing now, fundamentally speaking, so the catalyst for the rally that I continue to see is that things get progressively worse in the banking system, and it forces the Fed to print. Now they have a program in place called BTFP that basically forces the Fed to print if a bank wants liquidity. So banks want liquidity because they're under stress. They're under stress today. If they want liquidity, the Fed's going to have to print, right, under BTFP. So they're going to have to expand their balance sheet, and Bitcoin's going to celebrate. However, if things got materially worse, like 2008 style financial collapse, right? I'm not saying it's going to be 2008. A lot of people are calling for that. I disagree completely. But I think the crisis will hit some type of climax in the second half of this year, which will force more aggressive intervention. But also, I think it's going to hit all asset classes. I think Bitcoin is going to be dragged down by, let's call it a mini financial crisis, a mini 2008, which I still see happening in the not too distant future. So we're in the phase that it's right prior to that crisis. So the anticipation that the Fed is going to pivot, that things are going to break even worse, is lifting crypto prices. But if things were to get really bad, then you enter these liquidation events, these waves of liquidations where people sell anything they can get their hands on, and everything tanks under that scenario. I think we discussed that in the last interview, where I said, just look at gold in 2008. Gold was arguably the only safe haven in that mess, and yet it still went down when the crisis hit its maximum climax. I see kind of the same. Also, late May is 6 months from the November, and these rallies in the transition year, which is that's what this is according to my work. 2023 is just a transition between a bear market and a bull market. They last 6 months. The rallies in that time period, it's just 6 months up, 6 months up, 6 months down. I'm just rounding the numbers. That's kind of what.
And traditionally, in the 4-year cycle, this year is a consolidation year. It's the one that we shouldn't expect much, just kind of chop sideways for about a year as we consolidate, as Bitcoin's transferred from weak hands to strong hands, gearing up for the next couple of years of a good year followed by an amazing year.
Correct. That's exactly what that's exactly what my work points to. And if I look at cycles, I mean, there's two models that I overlaid on top of each other. One has turning points. The other one it fills in the cycles. So the turning points I can project in the future, but I don't know what the price level is going to be. I don't know what it's going to be doing at the time. But let's just say crypto, according to the cycle work that I do, it looks extremely bullish in 2024 and 2025. Extremely bullish. So I think it's going to be, obviously I'd interpret that as, it's a new bull market, obviously. And that fits perfectly with the 4-year cycle. And if you look at this cycle, 2023 so far, is somewhere in between 2015 and 2019. So 2015 was super flat. I think that's when you got into crypto, Max. So that's a flat year for Bitcoin. It starts at, I don't know, I think it's a range between 100 and I think 300 or 400. Yeah. The whole year was a range. Some pretty powerful rallies, some pretty powerful sell-offs. Whole year was a wash. 2019 is similar, but the upside was phenomenal. I think Bitcoin went up 500%, and then it went down 80% at the end of that cycle. So this is somewhere in between. The rally is not as powerful as 2019, but it's not as weak as 2015. It's average. So far, it's doing what you would expect.
Okay. So I'd like to talk a little bit more about the limitations of the model and the cycles that the cycle model that you're using.
All right.
Because, so I personally find the cycles models, that genre very, very powerful because they tend to be generally light, and I use them as my base case. But then I'm always aware that there's news cycles, there's things that happen, things like the minor exodus from China in the middle of the bull market. I think that abbreviated the bull market. I thought we would have hit $100,000 for sure. I think the primary reason we didn't was that event. It was a news event in the middle of that cycle. I think you've mentioned in previous broadcasts the COVID. That's just a thing that broke all the models that had nothing to do with cycles or whatever, but it broke the cycles model. So there are these news events that jack up what I consider the base case, which is the cycles. My theory, I've made a video about this recently, I haven't published it yet, but I was like, it's pretty easy when you're rowing a rowboat down a gentle stream and you're trying to forecast where the rowboat's going to end up, and the wind is calm and the flow of the stream is steady. It's pretty easy to figure out where the rowboat's going to end up if you know your cycles and you know the tides and you know whatever. Well, and I think that was the last decade. I think this decade kicked off with COVID. I think we've got the fourth turning, we've got banking crisis, we've got a de-dollarization process that will take many, many years to play out. We've got geopolitical shit going on with Ukraine and Russia. We've got Taiwan and China. We've got commercial housing crisis. We've got this. It's endless. And I feel like this decade is going to be the decade of black swans, just like boom, 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 one after the other. And it has the potential to jack up our base case. So last decade, the base case and the cycles theory performed really, really well. I think this decade, cycles theory is going to be a little bit, it's going to be a little bit rougher. I will still use it as a base case, but I'm aware that there's just so many things can go wrong and jack things up. So I'm just going to be a little bit more conservative, a little bit less leveraged. But I would like for you to talk a little bit about what are the limitations that you see with cycles theory and news events, and do you think that my thesis is correct? This decade is going to be a lot more news event driven than the previous decade.
So to answer that last question first, yes, I think it's going to be more news driven. However, I think we're going to like monetary debasement on steroids. So I think whatever your cycles predict in terms of price appreciation, the reality will exceed that. So let me talk about where the cycle models kind of fail, at least the one that I currently use. So actually, the creator of the grandfather of cycles is James Hurst. Everybody who uses cycles analysis uses James Hurst's models, or at least the framework that he described. Now, some people don't credit him. I think they should. There's another guy called Walter Bresser. I think that some people think he is the grandfather of cycles. I've studied both. It is very clear that Bresser based his entire work on Hurst. So Hurst, the granddaddy of cycles. What he talked about in his books is, hey, news events can affect the amplitude of the cycle. So they can cause, when the cycle is pointing down, they can cause prices to go down more than you would expect. Or vice versa, when the cycle is pointing up, it can cause prices to go up a lot more than you would expect, or less. So to your point, the sell-off and I agree, the cycles model was predicting a sell-off around April and May of 2021. I was expecting it. I talked about it since March. I said, we're due for a correction. It's going to be pretty severe. Will likely last a month. It lasted 4 months. Why was it so long? Well, part of the reason it was so prolonged is because the first sell-off, which took place in May of 21, was brutal. So the timing of the highs and lows in the cycle, you could have seen them coming. You could have predicted those cycle tops and bottoms. So the timing doesn't change. So the timing for a top, the timing for a bottom, they don't change. What changes is the amplitude of the cycle. The end result is something that may look very different from what you're expecting. As an example, in 2021, I expected April top, May bottom. By June, you're making new highs, and by November, December, you're $150,000 Bitcoin. But because we went down in May so much, the rally that took place in June, it did take place. You can look at a chart. Bitcoin rallied in June. It was just, I think it retraced half the sell-off from May. I did not expect that. Then it went down again, made a new low in July. Did not expect that, but I did expect the low in late July. We actually bought it in my service. So we bought in early August when I saw that it was holding the bottom in May. So I said, okay, double bottom formation. Very unusual. in a bull market, but the timing was perfect, unchanged. And that's what I've seen time and time again. So if you look at just the timing of the highs and lows, they don't change so much. They're easier to predict, ironically. And one of the earlier cycle trader thinkers of our time, William Gann, W.D. Gann, he did say many times that timing is more important than price. I don't know that I agree with that, but I have noticed that time is more regular. It's easier to predict than price. Prices, in fact, my model is not very good, and that's another limitation. I had to be honest. It's not very good at predicting price levels. So when I say 45,000, 50,000, yeah, I'm not super confident of that because I know my model is not great at that. I've had some success and some huge misses with predicting price. I've been very consistent with time. So timing is easier to predict. It doesn't normally change. Price, yes, it can be moved around by news events. And that's what leads to patterns that look different from what you expect. Because, for example, in 2021, going into 2021, you would expect higher highs and higher lows for every cycle. So that means the longest pause you would see is a month, 45 days, not 3 or 4 months. That's because that was likely, I never thought about it before, but you're right. That may have been caused by the China exodus. That may have caused a larger pause than you would normally expect based on the cycles model. However, the timing of the highs and lows on the trading cycle, 3-month cycle, unchanged. They're still coming in regularly when you would expect. So prices rise and fall where you would expect, when you would expect, but not at the price you would normally expect. And yeah, that 2021 market was very unusual. The timing model still, because the timing model is normally focused on timing, the timing of the highs and lows. So it picked up the high, no problem, even though it was super unusual because there was no parabolic low of top. The only bull market in crypto history that did not end with a bang, right? Bitcoin barely made a new high and then it crashed, right? But if you just look at the timing of the highs and lows, perfectly normal. And so the model was able to pick up by December, which was less than a month from the top. It said, bull market over. It's over. I couldn't believe it when I saw it. Because I was, hey, where's my 150K Bitcoin? Where's my 250K Bitcoin? Where's my 6-digit Bitcoin? Didn't happen. Okay. And I didn't think it would happen. Because we also had the catalyst of the Fed. And I think you can overlay on top of all of this the liquidity cycle, which some people have identified it to be about 3.5 years. Well, it's pointing up, this liquidity cycle, meaning central banks are starting to print again. You can check out Michael Howe for that work. I think he's the best when it comes to tracking the liquidity cycle. And he's been saying for months very consistently, and he's been right, because he started talking about this, I think in December, and he said, listen, the Chinese are paraphrasing, basically said, the Chinese are printing again. Normally when central banks are starting, normally when liquidity begins to expand, it doesn't contract. It just keeps going until we hit the cycle peak. So I took that to mean, okay, so 23 is different. They're printing again, and they are. So the Fed has reversed QT. I think in the second half of March, they printed. I don't have the numbers on top, but I think it took them like 10 months to reduce the balance sheet by $700 billion, and in 2 weeks they printed $400 billion. Since then, in April, the balance sheet has continued to go down again because of their QT program. But you can see how fast they undo it when things unravel, right? Another bank fails, something else hits the fan. They print faster than they remove liquidity. So they inject liquidity a lot faster than they remove. It takes them months to remove liquidity. It takes them weeks to re-inject it. So central banks, in my opinion, are back in printing mode. And that's bullish for crypto. It's going to be super bullish in 24 and 25 and beyond. Because I don't know, I do think, and I agree with you, that I think we're going to enter a period, the second half of the 2020s are going to be much more volatile. I don't know that, I think the cycle of the inflation deflation propped up by central banks, I think it's going to break at some point. But I don't think it's going to break into favor of deflation. I think it's going to break in favor of inflation, of constant debasement, where they're just not going to be able to even pretend that they can remove liquidity, because the whole thing will crash just by mentioning the word QT. So they're not even going to try. In other words, The whole world is going to go Japan. Japan doesn't even try to remove liquidity from the system. They know the entire system has become dependent on the Bank of Japan constantly buying bonds and injecting money into the system. That's where I see it. That's where I see Europe and the US. So that's what's going to change. It's going to be permanent, constant debasement.
Yeah, I see that. I mean, the debasement is exponential by definition. It always is.
Yes.
Like, I remember, like after 2008, lots of people, but myself included, I was like, the next time they print, it's going to be so much bigger. I think 2008 was world-breaking, world-setting. The central banks have never done anything like it. Next time that something happens, COVID happens, it was way bigger than the last time. And the next time something happens, it's going to be way bigger than the time before that as well. It is exponential in nature. And when you have that comparison to Bitcoin with a limited supply, or compared to everything else, like gold and commodities and anything else, if they're more expensive, people are going to build more of them. With Bitcoin, you cannot get more of the things. They are that tightly held, and by code, they are limited. And that contrast is just, in terms of the next decade, it just makes Bitcoin a very, very easy trade. The only reason we have these conversations is how do we get even more Bitcoin by maybe doing a little bit of trading, because you were sharing with you just how well your model is performed versus just buy and hold Bitcoin. And it's a very, very big difference over several years.
Yeah, it is a very big difference over several years, but I have to point out the entire reason, I knew this going in, I knew that was the reason, but the entire reason the model accumulates more Bitcoin than just buying and holding is that you avoid the bear markets. So all these 80% declines, you avoid them. So let me give you some specifics for Bitcoin. There's 3 major bear markets that I traded with this model. And in 2 of them, it makes money. And in 1 of them, it just avoids the bear market. So in the 2014 and 2022 bear markets, my model makes money. Bitcoin lost you money. If you were just holding Bitcoin, you're down 70%, 80%, right? In the case of the 2018 bear market, because of the nature of that bear market was basically there's one sell-off in February, there's one sell-off in November, and everything in between is just a sideways chop. In that one, my model was down 5%. So I'm being completely honest here. Bitcoin was down 80, the model was down 5. You're fine. You're doing okay.
That's a wash. That's a rounding error.
It's a rounding error, especially in crypto, especially since the next year, 2019, the model made 150% and Bitcoin was down again that year, I think, or slightly higher, maybe up 20%. Model's up 150. Why? Because it rides this, it's a transition year, and it correctly, I don't code for this, by the way. I don't put these rules in place. Oh, it's a transition year. You should buy the first half of the year. I don't do that. I just track the cycles. But by tracking those cycles, you ride that first wave up from December through June of 19. You sell in August, you never get back in. So you keep a lot of those profits. It's so this is how you can accumulate more wealth in crypto, by avoiding the large declines. This is really, and it's intuitive. It's down 80%. It takes a while to regain everything you lost in a bear market. So the best thing to do, in my opinion, not financial advice, but the best thing to do is to find a tool that kind of like that you know works consistently, at least warning you that there's a decline. You can use macro. I think you could have used macro to avoid the bear market because the Fed was jacking up rates. The last time they did that was 2018. There's a lot of work being done about the liquidity cycle. When liquidity goes down, crypto goes down. Liquidity goes up, crypto goes up. That's basically how it works. And it amplifies the moves. Liquidity goes down 20%, Bitcoin's down 90%. Liquidity goes up 500%, Bitcoin's down 5,000%. So not actual numbers, but that's kind of how it works. It's a leveraged bet on liquidity, which is partly why I think you can bet on higher prices in the future, in this decade too. Because what are they going to do? They're going to start printing? No.
I mean, with the long-term outlook, I just can't recommend Bitcoin enough to people. It's the biggest no-brainer of any asset class, I think. To me, it's just as safe as could possibly be on that longer time horizon. So anyway, holding something else in your portfolio, I understand for the sake of diversification, you might want to throw some different things in there, but for just holding something else, like if you have an intention to hold something for 7, 8, 9, 10 years, and Bitcoin isn't it, at least as a primary, to me, that's just a baffling strategy.
Absolutely,
You're going to.
100% agreed.
You're
Yeah, it is
going.
crypto.
So yeah, let's anything else we want to touch on right now?
Not for now, but I would like to touch base again in late May, see how we did. Because
Okay.
then I think I'm going to be more, perhaps more pessimistic about the next few months. So,
Okay.
it would be nice to give people a fair warning.
All right. Very good. Thanks for chatting today. Make sure you like and subscribe, and we'll see you in the next one.